been waiting on a position all day so far, and what I want to see now is a rebreak of the previous 4-hour candle lows, which I want to make an observation. It might not actually be necessary that you have the rebreak of the 4-hour lows, because your 15-minute time frame has already printed you a very good bullish indication. So a rebreak of these highs, price is most likely going to pop you up, and that makes a lot of sense. So rebreak at a 5 high pushes you up towards 84. It's quite likely that might happen, and you don't necessarily need the 4-hour wick lows, and this is what I'm eager about, because your hour's already closed, giving you a bullish candle closure above. Does that mitigate the fact that I need a 4-hour complete wick fill to re-break those lows and retest those lows before getting into a position? I think if price re-breaks this high, you should be entering into a position on the 15. And matter of fact, I think I'm going to do just that. Let's move me out the way. And then we're going to set a buy stop on the rebreak of that high. The scenario that we're looking at, if we can get it, okay, perfect. Actually, that's even better. So yeah, okay, you've broken it. So this is your new low. If price action starts pushing you up, we're looking at putting a buy stop. That is 136 risk. That is a 7.35, so we'll use a contract size of 7. That is 136 risk. And we will toggle my break of the high in a second here. So rebreak of the highs is right there. Turn on one-click trading, enable that function. So if this thing continues to rebreak its lows, that's completely fine, but have we placed it correctly? Yes, we have. That is the stop that we want. Your 5 is giving you a candle closure in a minute 48. If price gives you a candle closure below the range on the 5-minute time frame, you wouldn't want to get activated on a top wick first on the 5-minute. So we'll look to evaluate what the situation will be like in 90 seconds here. But we've got quite some time here. Your stop loss low is below those lows. So this makes sense for price action to push up. The lows is actually in a really good position here. If we look to the left of our screen, what we're mirroring on price action, this is typically where you'll see price action bottom out. If you really wanted to get aggressive, 47.45 to give your trade the most amount of room. We're getting a candle closure on the 5 in 1 minute here. This is looking pretty interesting. If we get the drive up on this current candle, you're also risking quite a bit too. I'm going to put myself here just in case, because we don't need to toggle the trade menu anymore. We just want to make sure we can close out quickly. Again, one-click trading function refreshed itself. Alright, so we're getting the 5 candle giving you a closure below the range here. So price action might actually see the drive down, unless the 5 gives you a fake out, which I don't think you're going to do. No. Right, if this 5 begins pushing up without breaking lows, it's going to get quite tough to evaluate what the 15 will do. So you're still re-breaking the lows, and if the lows get broken below your stops, it's going to be quite tough for us to look for those buy stops again, because your risk will change. You'll probably look at risking more. That means we'll have to change the contract size from 7 back down to a little bit lower and reset the buy stops. If we go through the checklist again on everything here, your daily time frame, I've established that you can go either way. Now, originally I said that we want the rebreak of the lows on the daily to get retested. But unfortunately for me, when we had the levels that we had marked up, the price point characteristics on the 4-hour didn't make too much sense to me at all. The way the body of the candle closed above the previous wick low, it didn't sit right with me. I think that the probability of price action reflipping on the 30 is going to be a beginning of a drive up to challenge the 4-hour highs, to then challenge the daily highs. So that's why the probability of me looking for a sell is quite unlikely, because we don't have the validation. That's what before the 4-hour counter gave him the closure, that's what I was looking for. So now, if price action gives you on the 30-minute time frame a rebreak of the highs, you should be looking to challenge your hour rebreak of the highs, which will give you the complete wick fill to challenge your previous highs to then shoot up towards your daily highs and then give us a little bit more. That's what makes the most sense to me right now. If price keeps completely coming down to challenge those lows first, again, you can reevaluate for buys back up once you've had those sells. But again, I can't take the sells down, even though they look pretty obvious with momentum. I can't take it because of that 4-hour time frame. So we'll have to wait and give ourselves a little bit more of confirmation here. I'm going to reset my chart because my okay cursor's back. Yeah, it's very interesting to me what price is doing here. 7 minutes left until the 15 gives you a candle closure. You have a possibility of the 5 rejecting. You'll have to change risk now. So your contract size will be a little bit lower if you're looking at still setting stops at your rebreak of the lows. It's a 1-to-2 risk to reward ratio currently. Again, if price action completely comes down, then there's a different price point characteristic. We're not looking at rebreak of the highs anymore. So that 5 rejecting at that area, have we seen it before? We've seen it here. You'd be risk off by then, so that's fine. In the mirror price point that we want, we've seen price push up before, retest the area, and then continue to drive up. So we're still validated in this area. Your stops is looking at below this low, still a 2.11. You're risking about 174 ticks. So 5.74, so we'll change the contract size from a 7 to a 6. So we'll cancel that order. And we'll put in a new one for 6 contracts. So we can maximize risking 1% and stay true to the strategy. That's risking 170 ticks now. 174. We're looking at the take profit area, it's 358. 5-minute gave you a bullish candle closure. It's up to this 5 on the 15. You might get the push up. The big question is this the right move for us to make? You've got liquidity. The 4-hour time frame's got the wick fill minimum requirement here being met. Your 1 hour has got the minimum requirement being met. You're heading into the last 15-minute time frame candle as you start flipping here. So we know what we're risking. We know what the take profit area is. We know that if we look to the left of our screen, we've had price action come down from these liquidity areas before. We've had the drive up. So you've come down, you've grabbed liquidity. Price action has given you some form of retest. It's a very minor retest here, let's be honest. But if you're looking at the mirror on price action, when you get activated here, you're expecting price to start pushing you up. We just don't know if the 1-minute time frame is creating bullish structure or bearish structure. Your 5 time frame still looks extremely bullish. I would say the one niggle is you don't have a fantastic bottom wick. If the 15 decides to give you candle closures below, then we'll have to delete the buy stops because it might just be a 15 top wick on the 30 rebreak of the highs for then price action to continue the wave down. And at that point, we'll have to reevaluate for more analysis before looking for any form of other positions in the future. So now you've come down for the flip bearish. If price action continues to break these lows, you'll be inactivated, or this is invalidated for a buy. If price action continues to push up and flips before the 15 gives you a time frame closure, and it has to be at least maybe a minute because we have to allow some time for a drive, then we're still validated in the trade. But this doesn't scream amazing. I mean, the bottom wick is great. If you rebreak those highs, you've got more of a chance, but you only have 2.5 minutes left. So it needs to happen quick. New 15-minute candle has opened you up, but you're getting a top wick first. So if price action comes up to flip that high, the probability of price action rejecting is much higher. Therefore, I am invalidated in this trade position. Again, if you re-break the 30 highs and re-challenge that hour break of the high and fly up, I can't do anything about that. I cannot bother about saying what if, because my strategy is telling me that this is now starting to become invalidated. Sure, you can argue that the 5 might print you a fake out continuation of bullish structure, but if you do not have a retest of that 15 bottom wick here, there is nothing I can do right now. It doesn't make too much sense. We can reevaluate for it again soon because we've still placed all of our things in the right areas. We can just quickly tap to get into a trade. Because this still looks to me like if you do have good structure, yes, price can push up, but you don't have that rebreak of the low. You don't have a previous break of the low on the 5. So I can't take it on this current 5. Alright, if we want this buy, I'd require in 30 seconds the new 5 to have a bottom wick first, clear some lows here, and then 1 minute time frame structure to still conform to that. I'd require this 1 minute and 5 minute to close you above this high here at 47.58. If that fails, then I can say goodbye to the buy stop idea. We still have the same stops, we still have the same areas. Yeah, I think if price action gives you a closure here, I cannot take it. No. So that 5 should probably come up for a top wick first. Oh no, it doesn't. Interesting. Can we get the lows? You've got to be careful with timing here too, because 30 flip bullish only leaves you with 10 minutes to the hour. That hour rebreak of the high only has 9 minutes left. So if we are thinking of taking a trade position, is the probability not going to be higher if you wait for the hour time frame to give you a candle closure above, because your likely chance of rebreaking lows to retest 762 is still quite high? Alright, so price action in 2.5 minutes is going to give me a candle closure on the hour. The likely chance of price giving you a candle closure below the range here at 47.62 is quite high. So I'm going to be expecting price action to most likely open up with a top wick first, retesting 6.2 areas on the lower time frame just to re-break some highs and break out of this range before price action can continue pushing down. Now, in desperation, if you're really looking for a good position on the lower time frames, you can introduce a range 2 breakout on this area here, where your stop loss is set above those highs once liquidity has been grabbed on the next hour candle, and then have the lows. Now, obviously, this is just a 1-to-1 risk to reward ratio. I'm not really looking for too much below. I mean, even though the daily rebreaks these lows, you're most likely going to get a previous day wick fill. It is quite likely. I'm not too sure if you want to be that aspirational in terms of having a target. We've seen price action retest these areas before, unless price action has grabbed liquidity from 4,800, which you haven't, at least not here. So for me to take a position like that is a little bit low confidence. So we've got 1:20 left on price. I think the chances of price action breaking these highs to continue to push up is a little bit slim now. I would say your 15 still points within that direction if you can get a rebreak at a highs first. Yes, that's possible for price action to come up, but your chances are the probability of price rejecting at 47.63 to respect resistance to come back down and give you a break-even trade is quite high. I'm not saying that I can't try it. I can try it, but I think the chances of it is going to be a little bit lower. So you've got 43 seconds here. Let's see what we have in price action. So you're still within that range on the 5-minute time frame. The 30-minute time frame, still the same thing. You're looking at re-challenging the lows first. If you can get a break of those highs, there is potential for price action to push down. We'll just have to wait and see what happens here now with price. So that still brings your 4-hour down. That now puts the 1-hour time narrative in the same correlation with the 4-hour time frame bias. So if you do open up with a top wick first, there is potential to re-pivot back down for continuation down. It's just trying to find a 1-to-2 risk to reward ratio now. So your 15 will pop up. You can still look for sales at 47.62. We just have to reanalyze pretty much everything now with price. So we break it down again. You have a daily time frame that can go either way. You can re-break the daily highs or re-break the daily lows. The 4-hour time frame here is still open. You re-break the lows, price action is most likely going to come swipe the daily lows, which is originally what we wanted. The time frame is starting to align. You've got the 4-hour time frame that didn't make sense previously, but now you've got an hour candle closing below with a top wick first. This is pretty good potential for price action to push down. Now you're trying to determine where the top wick of the 1-hour time frame is going to be. Your 15 time frame should sweep these highs before having some form of rejection. So minimum requirement is a top wick at 47.58. If price action continues to come down, it's still a range. We need to break out of this unhealthy little consolidation first to give us some form of confluence and confirmation of what price action wants to do. So I need the top wick being grabbed here at 6.2. And that has to happen first. If you give me the hour wick fill before giving me break of the highs on the 15 and the 5, I'm not taking it. Because like I mentioned before, that means you're looking at the lower time frame range. So if we just mark that out real quick, you've got a range here and a range, say here. Price action starts breaking you out, you're going to get some form of retest. So we just narrate this out. You're probably going to get something like this to push you down. But then you don't have a very good risk to reward. You're looking at 1 to 2, but our top wick is going to be your rebreak at the highs. Interesting. We'll see. We'll see what we can grab in price in a second here. Again, we're open to any options. The 4-hour time frame rebreaking lows makes a lot more sense now since you've got the hour time frame that closed below. I just want to see a bigger retest, which if you don't get, but you get the range breakout, then you'll be looking for a range 2 breakout on the lower time frame. Like I mentioned before, wherever you get your resistance, wherever you get your support, is going to be your new risk off area for price action to continue down to challenge those lows. Funny thing is, when you're in this range, buys are still validated if price action comes to this area here at 47.63 and gives you a closure on the 15 and gives you a closure on the 5 above the range. It's still likely price action will do such a thing because we've typically seen price action give you a candle closure like this, then all you need is a tiny bottom wick for then price action to continue to push up in this direction. That's a very high possibility to re-challenge your 4-hour break at highs and the daily highs. You might reverse the entire day. I think one thing we have to consider is this entire day has just been in this range of 560 pips. Now, our typical days will most likely be like around 1,000 ticks. This one being 1,006. So it's not a very favorable day to get a very good runner or any form of massive position sizing here. So we just have to be grateful with what we can grab. So the current lineup that we have on price action was that range 2 breakout. If price action continues to push up towards the upside and give you closures above the range, then the original buy stop area is still technically validated. The only thing that needs to give you confirmation is a clean drive up on the 15 time frame. So this needs to close you bullish like this. Bottom wick retesting the lows, you can take a rebreak at a high of that candle. And then your stops below those lows and be relatively low risk on this trade. We will not be doing a 1% risk with a tight stop like that. But again, we'll have to wait and see. You've still got 2.5 minutes left until that happens, and you're still stuck in this range here on the 1 minute time frame, and 30 is still waiting on a confirmation. The 15 is still waiting on the confirmation. Everything is still waiting on confirmation, so we just have to wait and be patient. Right, now one thing is this. Is this potential fake out? It's going to happen very quick. It's already happening very fast. Yeah, I'm not too sure if this is your range 2 breakout. You rebreak that lower price action will most likely come down, but that should be your risk off area. That puts you 32 ticks in profits. I'm not too sure. I'm really not too sure. Your 5-minute candle gives you a closure in 30 seconds. If you get the closure below the range, I suppose that's something, but it's not a very key indication that price action is 100% confirmed to come down. It's not a very good setup at all. It looks to me like you're still trying to range. Okay, so this is roughly where price action starts to play tricks. You've got time frames starting to contradict each other. So you've got half hour left until the hour. The hour is most welcome to still push you down. However, if you look on the 30, you've got a candle wick closing like this. You're still within the current range that we're in, 47.51. You're probably going to get the rejection to push up towards 47.56. It's not very likely that you're going to get exactly the same drive that you expect. You've just had London session give you the candle closures. Now you're expecting price to just play ranges. Am I saying that price action will not give me what I want? Absolutely not. Price action within the next couple of hours before the daily time frame gives you the candle closure, before market closes, might well bring you down towards the daily lows. It's just that the probability on the charts right now, especially with the amount of volume that you have being presented, doesn't make any sense for you to just sit on the charts and wait for something to happen. So I'm going to call it a session. We'll come back and see what happens with price action later tonight. If we can wait for price to give you candle closures after market close, we'll see where it closes. But aside from that, that's really it. We showed up, we tried, and the main priority here is just to get that mindset back into the right setting. And I think this did help me by just yapping to myself and recording a video for myself. So let's see if this brings in any value to any of you as well. No trade executions today, but a lot of good top-down analysis from the session. So pretty good quality, and we will come back again when we have something to review, and that's it. We are back. It's 9 p.m. Price action is about to close on market. We're in the last hour of the day. Yeah, we've had kind of this really tight range moving on today, which isn't really spectacular. I think we made the right call because no matter what, we didn't have what we really wanted to get grabbed today. We understood that we were in the range. We understood when we came to the charts that price action has either got two possibilities. You're either going to re-break the highs or re-break the lows, which none of which you actually got today. And I stayed true to what I wanted in terms of my requirements, and we didn't get too trigger happy. So look, coming over the past 2 days where we had 2 losses on Monday and Tuesday, it's been really rough, especially on the psychology. And it's very important not to marry my thoughts to I've just come from 42% in progression, in the progression bar across my evaluation, back to a 28. Look, it's a speed bump. We have to understand that it's the first ever time that I'm trying a proper evaluation phase, that I'm actually taking it super seriously and understanding how to scale it properly using a 1-to-2 risk to reward ratio and actually having a strategy. I just have to stick to the plan, and it's very frustrating. I'm sure many traders will also tell you the same things when they go through the struggle at the first stages. It is very difficult just to listen to your own rules. To know that, it's just been a really bad day. You just want to trade. You just want to set that stop and say, whatever, we're just going to go in. It happens more than you think. And for me, I think I've done a very good job of trying to limit the amount of times these happens during the years and during my experience in the career. But it does happen, and it's how you bounce back from it. So I've learned my mistakes. I'd like to say I've learned my mistakes. We understand the repercussions of it. But ultimately now my main focus is trying to actually risk the right amount. So in today's video, the learning for me was actually having the intention to set and change my contract sizing in sync with my amount of risk. So today, if we only risk 100 ticks, then you divide your $1,000, which is your 1% in your capital, to divide that by 100. Oh my gosh, my brain is not braining. And then you'll get a 10 contract size. So yeah, there you go. That's what I was trying to get at. Holy shit. Yeah, that's what I'm trying to get at. So you'll be risking what? 10 contracts with a 100 pip stops, yeah, that's $10 per tick. That makes sense. You're risking $1,000. Holy shit, my brain is fried. But there you go. Price action today has just been ranging, and we'll come back tomorrow to see what the charts will give us in terms of the play. In terms of news, we don't have. Oh no, we do. We do have initial jobless claims tomorrow. So 1:30 p.m. news will drop, and we'll see where that takes us. But aside from that, I'm very tired. I want to go to sleep. And we'll come back tomorrow and see what we can grab and try and get a step closer to achieving our vision and dreams.